Hi, I'm Senator Jeff Merkley, and today I want to talk about developments in the payday loan industry and how these predatory developments need to be stopped. Now, payday loans are short-term loans that are secured by your next paycheck. They generally are just a few weeks long, but they carry very high interest rates, 300, 400, 500% interest. And the result is that the debt you owe goes up and up and up. After 1 year, a $1,000 loan becomes $5,000 that you owe. After 2 years, it's $25,000 you owe. It's pulling a family into a vortex of debt from which they cannot escape. Now, in recent years, Oregon, my home state, and 17 other states have passed tough state laws to stop these high-interest loans. They put a cap on interest rates, and they've banned rollovers that turn a 2-week loan into a 3-year loan. But the payday loan industry is finding ways around these tough state laws. Let me explain how this works. The payday loan company has you sign a contract, they solicit you online, and they send some cash to your bank account. So here's John Consumer's bank account. But that money's not there very long because the payday loan company says, we have the bank account number. We can do what's called a remotely created check. So they send electronically the remotely created check over to the bank, and then the bank, without the intervention or involvement of John Consumer, sends the money to the payday company. The payday loan companies are reaching in and taking your funds out of your bank account without your involvement. And that's not the only predatory practice. They also have a system called prepaid cards. So in this case, instead of putting cash into your bank, they put cash onto a card. Now remember, they're already charging you 300, 400, or 500% interest. And then on top of that, they add predatory transaction fees. Maybe they charge you for calling them up and asking them questions about the card. Or they charge you every time you use it. Or they proceed to say there's going to be a very outsized overdraft fee. It works like this. You aren't sure how much money is left on your card. You use it to buy something that costs $60 when there's only $50 on the card. And thus, instead of turning down the purchase, they fund it, but they charge you a big overdraft fees. All of these adding on top of the high profits they're making from the 300, 400, or 500% interest. Now, these practices hurt families, and we need to stop them. That's why I've introduced the Safe Lending Act. The Safe Lending Act does 3 things. First of all, it would say these remotely created checks in which companies reach in and grab your funds without your involvement, that those are illegal and they're going to be stopped. Second of all, the law says that these predatory fees on these prepaid cards that are on top of that very high interest you're already paying, those are illegal. And third, the law says that the payday lenders, whether they're operating from a storefront or they're operating online, must abide by the very tough state laws that 18 states have adopted. If we do these 3 things, we will improve the financial lives of millions of American families. And that's very much worth doing.